I think the risk of a crash is much, much higher than what the public perceives. And I just like to say this, at the present time, we have statistics about this. People are gambling in options like there is no tomorrow. They're buying stocks like there is no tomorrow. In consumer confidence figures, one of the indices is the expectations of stock prices in 12 months. It's at the highest level ever. And while the public is buying in its complacency and in the absence of considering the risks, given the high valuations, one of the, say, more successful investors over the last 50, 100 years, Warren Buffett, has increased his cash position. Now you have to think this philosophically. The public is piling in, and a proven smart or intelligent investor, with lots of knowledge because of the good contacts he has with the government and so forth, he is selling. So the masses are buying and the smart man is selling. Tells you something about the market position.
On this episode of the WTFinance podcast, I have the pleasure of welcoming back a very well-known man and one of our favorite guests, Marc Faber. Or Faber. Marc is a well-known contrarian investor and the editor and publisher of the Gloom, Boom, and Doom report. So, Marc, thanks so much for coming on the podcast today.
It's my pleasure. Thank you very much for having me.
No problem. Looking forward to the conversation. We always, we don't know where it will go, but we'll see. But my first question is, what are you currently seeing in the economy and in markets?
Well, I see two economies. I see the economy of the wealthy people and the asset holders who have benefited from essentially more than 40 years bull market in asset prices, with stocks, bonds going up, real estate going up, everything going up after 1980, 82, when stocks and bonds bottomed out. And we had this period of disinflation and the opening of China and the breakdown of the communist ideology around the world, which lifted the standards of living of, say, 3 billion people. And then we have the economy of ordinary people in the Western world, whose standards of living, by and large, has gone down. As I said, I distinguish between the economy of the very wealthy people, the 0.1% or 0.01% that benefit from asset inflation, and then the economy of the non-asset holders, the workers, whose benefit is much less or negligent or non-existent when asset prices go up, because they don't have any assets, but they have debts. And these standards of living have been hurt, particularly after the bottoming out of interest rates in year 2020, when the 10 years US Treasury was at less than 0.6%. From there on, interest rates went up, and the young generation and many people who had borrowed money in the belief that interest rates would never go up, they got hurt very badly when interest rates went on their, say, mortgages from 2% to 6% or 5%. So okay. This is what I'm seeing.
Yeah, and so you don't see any changes to that trajectory, because as you said, there's asset inflation has been very high, actual inflation has been very high, but if you're a worker, you're going to be really struggling because you don't own any assets. So do you think this sort of trend will continue?
Yes, I think in the Western world, we have an institutionalized poverty. In other words, the government can hand out money to people, which they do. We've moved very far to the left in Western society, and we subsidize a lot of people. We subsidize them through unemployment benefits, through long-term care and social security, and allowances for this and allowances for that, and so forth. But what it leads to is essentially these people earning a bit more or having a bit more money. Then they go to Walmart and they spend it, and then the money is earned by the capitalists who own Walmart. And the ordinary people are still struggling. And now they have this brilliant idea to impose tariffs. It's an absurd idea because the tariffs will increase the prices of just about everything. And the employment gains will be very minimal because companies will pay the tariffs rather than move production in the US, where there is not sufficient technological skills, nor are there enough people to do the jobs that, say, the Chinese or the Indians or the Vietnamese do.
Yeah, so I guess in the near term, as you said, the companies they'll eat the tariffs. They might build manufacturing in these Western countries, but then they're going to be automated. So basically, there's just going to be lots of people with with no work in all countries.
Yes,
or with less work.
correct. They will find jobs, like I need people to work in the garden, to clean up the house and so on. But these are relatively low paying jobs.
Yeah, it seems like the automation is coming after the sort of the white collar workers. The more skilled workers is where you can automate things, whereas the more manual labor and other factors is harder to automate.
Correct.
Makes sense. So you mentioned sort of in your, I guess, answer before, the institutional shift, and how it seems like these institutions all around the world keep getting larger and larger, but then they are also some of the worst allocators of capital, or worse use. They don't know how to use money very well. So then it seems like there's just these massive blobs that are taking in all this equity, which could be invested in all this capital that could be invested in the economies and maybe help to improve. Did you agree with that? And it seems like that's maybe what Trump and parts of the US government, they're going to try and change that.
It's difficult to tell to what extent someone, whether it's Trump or someone else, can break the deep state. Until 1910, the governments in Western countries were around maximum 10% of GDP. There was one or two countries that were at 12% of GDP. But government as a percent of the economy was small, and therefore the economies at the end of the 19th century in America and in Germany were growing very rapidly because there were no regulation, nothing kept growth down. But then in the 20th century, the bureaucracy has expanded and expanded, and try to open a restaurant in New York nowadays, or in Zurich or Munich or in Milan is very difficult because you have so many bureaucrats that never worked in a restaurant that come and tell you how to essentially install the equipment in the restaurant for health, hygiene and health care and fire and whatever. And that contributes to inflation, that prices go up, and it retards economic growth. Maybe these restaurants are safer. I was last night in a place in Shanghai, which is very unusual. It's a boxing stadium, and normally boxing stadiums, they have a gallery around the boxing ring for the spectator. But in Shanghai, the peculiarity of this boxing stadium is that it's surrounded by bars with girls and pool tables and heavy drinking. And it stays open the whole night. And the hygienic conditions are not the best. But it's a lot of fun, and everybody's happy and enjoying. They focus more on the girls than on the boxing, and there's heavy drinking. But this is life, These people call Thailand a failed state. It's interesting as a philosophical consideration. In the eyes of economists and of social observers, Thailand is a failed state. But Thailand is one of the highest recipients of tourists around the world. As a percent of the economy, tourism is very important in Thailand. And the retirees that come here, they flock here because it's perceived to be a very friendly and free country for retirees and very safe. And I'm mentioning this because the perception, some people say, it's a failed state, and yet it attracts so many foreigners to come to this failed state. Maybe Western Europe and the US should be more failed state-like in order for their citizens to be more optimistic, because consumer confidence in both Europe and in the US among people is not very high.
So I guess, do you see a shift globally to smaller governments? Do you think there has to be a shift? We've seen, seems like lots of governments are being sort of voted against. France is having issues. South Korea, they had a coup, attempted coup. There's all these sort of factors that are affecting governments. So do you think there needs to be a shift away from how governments run, or will there be?
This is an issue that, let's say, preoccupies my mind. Will we move more to the left before we move to the right? Or are we moving now to the right? And to what extent can we move to the right? Because, once you have social security, once you have benefits, unemployment benefits, and everything is taken care of by the government, basically. How can you dismantle that safety net? Because most people prefer safety to freedom. They will lean towards the view that they rather have, or they don't consider freedom to be very important. They perceive to be fed. In other words, have enough food to eat and a small car to go around with, and so with that they're reasonably happy. They don't want to be risk takers like the capitalist that drove economic growth. He opened a shop, or he went and was a pioneer, and he developed land in America and worked on the land. These were occupations with very high risks. Sickness, poor crops, droughts, floods, everything. You have to admire these Americans who went to the wilderness and developed the country. Also the Canadians, the trappers that went through the Canadian mountains. I mean, the hardship these people endured is unbelievable. Nowadays, people come to America because they get benefits. They don't want to take risks. That is the difference between people that moved in the 19th century to America. They arrived in America, they had nothing. Maybe they knew some relatives, or maybe there was a church organization that supported them a little bit. But by and large, they arrived in America, and unless they worked, they faded away. Nowadays, people arrive in America, they don't want to work. Same in Switzerland, same in Germany. The immigrants that come, lots of them, they don't want to work. They're above work.
Yeah, and I think unfortunately, it has to probably get to the point like in Argentina where you're giving all this free stuff, but is it really, you're giving money, but it's never enough because of high
It's
inflation. You're
never
giving,
free.
yeah,
Never
it's never
free.
free.
Inflation
Someone
is a
has to pay
tax.
for it. And I think, well, in some parts of the Western world, I think, especially in Europe, the healthcare is free, but you have to wait. If you need an operation or anything, or you need even cancer treatments, there's this massive backlog. So then you wonder how long people put up with these
In
things.
general, what is free is much more expensive than what you pay for. In general. Because
Yeah.
what is free is paid for by your tax that is collected from you and by inflation. That I want to make very clear.
Yeah. No, definitely. So do you see inflation being an issue in the
Yes,
coming years?
I see this as an issue. I believe that I have documentation that shows that the rate of cost of living increases in the US is much higher, and I repeat, much higher than what the government statistics suggest that are broadcasted and issued by the Bureau of Labor Statistics. The Bureau of Labor Statistics, in my opinion, is a fraudulent organization that understates the rate of inflation massively, massively, not a little.
Okay. So inflation is going to be an issue moving forward. So it's going to be tough for the average person. I think that's where we see these political shifts to the left, to the right, or even just maybe there'll be a joint extreme populism that comes, which maybe was what we've seen in the US. Is this extreme populism that sort of moves past left and right into something else?
Well, I mean, let's stick to the reality. Affordability of home buyers at the present time is at the lowest in history. You can measure how affordability by comparing the price of a house to your income or to the typical income in America or the average income or the median income and so forth. And you can also measure the standards of people according to consumer confidence, and you can also measure it according to essentially how many people are free. I consider someone not to be free that needs to collect his paycheck at the end of the month to pay his bills. He's a slave. He collects his salary and right away has to pay the interest on the existing debts he's got and the expenditures for his house or for his apartment or for his car, whatever. And that ratio of people who live paycheck to paycheck is now at the highest level in the history in America. And so when American economists come and tell me how the great consumer or the consumer is in such a great shape, this is all nonsense. The asset holders are in a great shape, including myself. I'm also asset holders. I benefit from money printing, but I'm also an economist and a social observer. And as such, I must condemn money printing. It's a very evil way to impoverish the majority of a population. But Wall Street, the economists in Wall Street, they all paid and they're all also bribing the Fed and are consultants to the Fed. So you will never hear this criticism by Wall Street economists. Wall Street economists, they want to understate the rate of inflation so they can keep on printing money. With money printing, the asset values of portfolios and of all kinds of assets go up, and the fees that Wall Street collects from all these assets goes up as well. So Wall Street and the Fed are in a symbiotic relationship that benefit both. And the government as well, because the government can issue bonds at artificially low interest rates. But the public will never be informed about this because the media keeps quiet. I was in interviews in New York with all the major media outlets. I told the journalists when they told me, oh, the rate of inflation is 1-2% and so forth. I said, I want to ask you, by how much is your cost of living going up every year in New York? They all were silent. They didn't dare to tell me that their cost of living was going up at something like 10% per annum.
Hey everyone, sorry for interrupting. I just wanted to extend a massive thank you to you for listening and tuning in and for your support over these 3 years. So we've had, hundreds of guests that we've welcomed on the podcast. We've had millions of views with hundreds of thousands of different people listening in. So I just wanted to thank you. You know, I started this as a student. I'm now currently working and I've always done this on the side just because I have a passion for it and I've enjoyed it. And probably similar to yourself, you listen to all these, different YouTube channels and podcasts of people listening to different guests. That's how I started, and I just wanted to sort of take the plunge and be able to have the opportunity to speak to these people, and you've made that happen. So thank you very much. Just myself, don't make any money from this, and it's really a passion project. So thanks for supporting that passion of mine. If you wanted to support the channel, all I ask is if you could like, subscribe, or even comment, positive or negative feedback. I'm always willing to take constructive criticism. I'd really appreciate that. But otherwise, thanks so much. If you can believe it, only 14% of our listeners actually subscribe to the podcast. So if you can, great. If not, no problem at all. Thanks for listening. And let's get back to the show. Yeah, and I think that's the challenge where, depending on where the money goes, depends on the inflation. So we saw during COVID, they gave money to the average person, was spent, inflation increased. If money trickles up to the wealthy, it gets invested into assets, and that's where the inflation comes from. So
they distributed money to poor people, to essentially everyone, so that they could go and shop at Walmart, they could go and visit Disney, and they could go and buy ice creams from and food products from whoever makes them. The money then flowed all back. This distribution, this redistribution of money is an illusion. I mean, I studied financial policy, fiscal policy, financial policy, and taxation, and also tariffs, because I wrote the thesis of my dissertation about the repeal of the Corn Laws in England in 1842. That was the great financial reform of Sir Robert Peel. He's known internationally as having invented essentially Scotland Yard, the peelers, they called them, the police force. But his major achievement was to bring England, the UK, from a system of protectionism that benefited few people, the wealthy class, into free trade, and he dismantled the Navigation Act, which were the prime example of protectionism. And so I'm reasonably familiar with tariffs and the impact of tariffs on society and on countries.
So why have we got into this point? Because you'd say that things are more globalized than they ever have been before, but the average worker isn't benefiting. Is that just because companies have had too much power, or I guess what has shifted from that period that you studied?
This is a question that preoccupies me a lot. I grew up in the 1950s, and I would say in the 50s we had a relatively healthy capitalism, but not perfect. There were also restrictions on trade. and patents and so forth. But we've moved into an economy where governments think, or that the problem is market-oriented economies, such as Milton Friedman was, no longer exist. All the economies, one way or the other, are interventionists. They say this should be done, the government should do that, and so forth and so on. They're always interventions. I'm, of course, against any intervention. And not intervention also means that you have a capitalistic system. And I want to reiterate what I said for a long time and repeatedly. Capitalism involves pain. There are lots of people that go bankrupt in capitalism. And in capitalism, you have recessions. Once you have a government that doesn't want to accept recessions, and each time the economy slows down, increases government spending and prints money, you avoid near-term pain, but you produce much more pain in the long run. And the recession, traditionally during recessions, unemployment went up, and then wages went down, and then employment picked up again. But now what happens is that nominally wages do not go down, but because of the money printing, the prices go up more than the wages. And so in real terms, inflation adjusted, the standards of living of people is going down. Anyway, I mean, if someone is interested about really capitalism and what society looks like in a capitalistic system, it's a very good book, Capitalism, Socialism, and Democracy by Schumpeter. That I recommend to everyone. This is very interesting. And it also explains why capitalism leads to socialism, partly because of the jealousy and the envy of the academics at universities, because they hate to see someone who has no education and makes a lot of money, whereas they consider themselves to be the elite. Intellectually, they make nothing. So anyway, here we are, and this is my view. I think the investment markets are uninteresting and interesting. Uninteresting because some markets are overvalued, in the FANG stocks, the Magnificent Seven, and so forth. And by definition, if something is overvalued, by definition, something is undervalued. So you have to go and buy the undervalued assets, but the undervalued assets are neglected, and that's why they're cheap, but they don't move. And so they stay cheap for a while until they move. They suddenly will move. And so I'm looking at these undervalued assets around the world.
So what do you currently see as undervalued?
Well, everything that is not the US is relatively inexpensive. The US has outperformed Europe and emerging markets for the last 15, 16 years. So these markets offer some opportunities. I think China is undervalued, very clearly undervalued. It may not move for a while because sentiment about China is very negative, and the media in America is doing its part. Whereas 10 years ago, they wrote all these nice reports about China here and China there. Now it's all negative. And the sentiment will stay negative, but the value is there. Hong Kong property stocks are very cheap. And this is the first bull market in precious metals where precious metals shares, in other words, the miners, the gold miners and the silver miners and platinum and so forth, have not gone up more than the price of bullion. In fact, they haven't done anything. they were a great disappointment, but doesn't mean that they can't go up in future. So these are the type of investments I'm looking at.
Yeah, well, it seems like someone's buying the commodity, but they're not buying the producers. So it's
No,
from
it's amazing.
non-Western countries.
Yes, but some miners have done well. You know, but in general, you look at the GDX, is the mining index, the mining ETF is very depressed.
Yeah. And do you think the bubble, so you said the US is very expensive, do you think that will continue to move forward, or do you see there's a risk of of a crash?
I think the risk of a crash is much, much higher than what the public perceives. And I just like to say this, at the present time, we have statistics about this. People are gambling in options like there is no tomorrow. They're buying stocks like there is no tomorrow. In consumer confidence figures, one of the indices is the expectations of stock prices in 12 months. It's at the highest level ever. And while the public is buying in its complacency and in the absence of considering the risks, given the high valuations, one of the, say, more successful investors over the last 50, 100 years, Warren Buffett, has increased his cash position. Now you have to think this philosophically. The public is piling in, and a proven smart or intelligent investor, well, with lots of knowledge because of the good contacts he has with the government and so forth, he is selling. So the masses are buying and the smart man is selling. Tells you something about the market position. Now, some young people will say Warren is senile. Yes, possible. But I just wrote a report. The Trump top. I think the stock market is going to peak out very soon. Lots of stocks have already topped out. They will not go higher. And some stocks like energy, they are relatively cheap. Mining stocks are cheap. And, you know, there are assets that are not terribly expensive. There are European stocks that are not terribly expensive.
If you have any perspectives on the BRICS, and there's lots of talk about a currency, but then the Kazan meeting came and went, and there was no focus on that. And I think a lot of the BRICS currencies are actually going down in value versus the dollar. So I don't know if you have any perspectives on that, or if you
Yes,
think that's
this is
possible.
correct. The dollar has been remarkably strong. But when I look at the price level of the US and other countries, my sense is that the US is very expensive and that other countries are very inexpensive. So there'll be eventually a readjustment, but it can take years. It's not currency movements is very difficult to predict. I don't know any forecaster who has been consistently right about predicting currency movements. But my sense is looking at purchasing power of money in the US price level is very dear compared to the price level in most emerging economies. So as a precaution nowadays, I would move some money out of the US into emerging economies or out of the US dollar into precious metals is another possibility.
Yeah, great. So, Mark, thanks so much for your time today. Appreciate it. We've sort of touched on lots of topics. My last question is, what is one message you want people to take away from our conversation?
I think at the present time, particularly in the US, but also among young people around the world, the belief is ingrained that asset prices will always go up because of money printing and other government interventions. But I list now an example where money printing did not help. Say, if you look at commercial buildings around the world, they have lost tremendously in value over the last 10 years. I have pictures of buildings in Los Angeles, in other cities in America, of nice office buildings, no problem. And they were worth a few hundred million 5 years ago. And today they're practically worthless. Practically worthless. And there have been very big and substantial declines in commercial property values, despite of money printing and everything. So this can happen. And I mean, I just want to say this. I mean, I read history, and I have, as you can see, a large library in my office, and I'm familiar with financial crisis and so forth. This is one thing that will never cease to exist, that crises occur from time to time. And yes, the government can intervene, but it can also intervene and make things much worse, like in the Depression in the 1930s, which incidentally, one of the reasons for the severity of the recession were measures that were introduced by Hoover when he was Fed. Yes, he was Fed chairman. And later on, no, he was the president of the US. He introduced also the Smoot-Hadley tariffs, which reduced trade and led to trade wars and worsened the depression. So I am very skeptical about the interventions by Trump, because one of the most difficult things in economics is to know, as an economist, what are the consequences of some economic policy measures, or increased taxations or lowering taxation. You never know exactly where the intervention will have an impact. And the fools in the world, they're always confident that they take the right intervention. But I'm a very skeptical person, because I studied economics, I mean, extensively, and I've seen policy measures that led to exactly the opposite of what the intention was. And I'm like Milton Friedman. I'm in favor of little government intervention in economic matters. This is my message.
Great message. So,
Okay.
Mark, thanks so much again. If anyone wanted to find out more about your work, the
I
Gloom,
have a
Boom,
website,
Doom report,
gloomboomdoom.com. I publish the Gloom, Boom, and Doom report and a monthly report. And, some people like it and some people don't like it. But I think my report, if someone wants to study economics and economic history, if he reads the report for 2 or 3 years, he will have increased his knowledge of economics. That's for sure.
Yep, great. I'll put that in the description below, but thanks again for your time.
Okay. Thank you very much, Anthony. And I wish you and all your viewers and listeners a very wonderful festive season. I'm reluctant to say Merry Christmas, because suddenly you're racist or something. So, but a wonderful festive season. And as a Christian, to my Christian compatriots, I say Merry Christmas. I wish you a happy and prosperous new year.
Perfect. Thank you very much. I'm sure they all wish the same for you.
Okay, thank you.
Hey, everyone. Thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, you know, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right, thanks again.